Hey, today is Sunday, February 3rd, 2019. Taking a look at the S&P 500 because I'm not going to be here tomorrow morning. I'm taking a rare morning off. I'm going to try my best to be back tweeting by the last hour tomorrow. Anyway, this is literally my eighth try at doing a very short, concise video for you guys. I've deleted every single try up till now, and I'm crossing my fingers and hoping that this is lucky number 8. This is our 5-minute chart. You can see that we have a little bit of a head and shoulders forming on us. The head and shoulders, especially when you're looking at it on a really short time frame like this, it's just simply a product of a failed second breakout. You have one breakout that works and then back tests, and when we come up to it to make the breakout above the previous high, it fails, on indecision, and we sell off from there. So it's really the product of two inverse head and shoulders sitting right next to each other, sort of squished together in the middle, and in the middle that makes the head. And right now this high that we made on Friday, and then the failure to take out that high after we did our first back test in the morning, sort of forms the head of a little bit of a head and shoulders. Coming into tomorrow, we have Google earnings after the bell tomorrow night, and then we have the State of the Union address, unless that has changed. That is coming our way on Tuesday night. So I kind of see it that we might have just sort of a nothing burger of a day where we just sort of sit here sideways, continuing to fill out the right-hand shoulder and balancing this profile here, this amount of time from here to the head, from this high a day on Thursday morning to this high of day on Wednesday. On Friday morning, and then just sort of balancing out this head and shoulders pattern to here. And then maybe we sell off a little bit in the afternoon, or maybe we try and rally in the afternoon to take out this high, but never quite make it. It is okay if we do not close above 27.0653 tomorrow, unless we come out and make a new high over 27.16. Then we do need to come back down and at minimum hold a close against 27.06. Otherwise, that is a bearish slant to what is going on. And there is a whole brand new blog article written about that. I wrote about it January 21st, and I tried to retweet the article yesterday for those who missed it the first time around when I posted it a couple of Sundays ago. So as long as we do not need to hold that close tomorrow if we don't make this new high. It's okay if we close lower than we did on Friday, as long as it's not a close all the way down here out of range. Because as you can see, we have a clear set of back test lows that have been holding us together, and these form the neckline of our head and shoulders that we're starting to sort of see here. And the neckline of our head and shoulders would ultimately break if we trade below 26.90 right now. 26.90 was the high on Wednesday, the day of the Fed. So if we are going to break down and we see a trade below 26.90, we're going to go on through our 80 handle rule. We're going to trade back to 26.80 and test our high from Wednesday. Our close from Wednesday into the Fed, and our low of day, which was a little back test through that close from the Fed on Thursday. And then if we break that, we're going to go on down to test the 10-day simple moving average, which sits around 26.67 when we open tomorrow. Our 100-day simple moving average has sort of marked our shoulder level where we have, either traded up to and failed or moved out above. And this point is going to move down. This is where it was on Friday's close, 27.10. I think it's going to move a little lower. It's going to be right around, maybe just above where we closed on Friday as we open tomorrow. So intraday, if you're seeing a lot of fighting and a lot of inability to get above and hold above Friday's close, that's going to be the 100-day simple moving average, acting as resistance. If we come out of the gate tomorrow and trade up but fall back, and we do not really break below 27.06 to 27.05 or so, it's a combination of holding Friday's close and holding the 100-day simple moving average. So let's look at that on a daily chart. Here is our 100-day simple moving average. It's falling very quickly. It was at 27.10 when we closed on Friday. It's going to open up down here about 27.06, 27.07, right where the level was that we closed at on Friday. Here is our 10-day simple moving average coming up. That is going to offer us support if we break down completely, as well as a back test of this downtrend that we can draw from this double top we made around the all-time high through the December high and let that extend on down. That intermingles very well with our 10-day simple moving average. One more rule that we can apply to what is going to be going on here tomorrow is the 80 handle rule. If we look to the left over here, you can see this consolidation. You can see this breakout over 2760 that happened around the time that happened on this big impulse candle when the Fed statement was released, and we moved up. When we moved up to about 2690, where we made our high on the day of the Fed, and then we came back, consolidated, and closed on 2680. So this was a breakout over 2660, and then a move up, and then a consolidation back down here at 2680. Then on Thursday, we came in and back tested this one more time, and we moved straight through 2700. So there was our play out of the 80 handle rule on the way up through 2660 to a look above 2680, a back test of 2680, and then boom, a move right up through 2700. And here we are again. If we are to fail at 2700 and we are to come down and fail this 2690 one more time, where we made our high into the Fed and where we made our first look above 2680, then we then we would fail and we would go back and test 2680 again. And if that fails, we go back and test the 2660s. If we break down below, if something happens tomorrow where we sell off, maybe word gets out that Google's going to miss, or some, magic happens where the numbers are released early, or something stupid like that happens and we start selling off. Use your 80 handle rule. Use the area of 2660 to 2670, knowing that that is where the 10-day simple moving average is at. And use that as a hold, because if we do not hold the 10-day simple moving average, if we were to close below it for some reason, it's over. We're probably going to be correcting much more deeply. But like I said at the beginning of this video, that I'm trying to keep short and concise and not go off on too many tangents, I think we're probably just going to have a nothing burger of a day where we just sort of sit here sideways. And if we don't take out Friday's high, that's okay. If we don't take out Friday's high, it's also okay then that we don't close above Friday's close, provided it's not a full-on like blank out here where we end up selling off and closing below 2690. Okay, so your most important points right now are going to be wherever the 100-day simple moving average is. On failure of that, we're looking for 2700 on down to these sets of back tests, which were all in the 90s, the 2690s, culminating at the very bottom of the scale here with this close, or I'm sorry, with this high that was made on the day of the Fed at 2690. And if that breaks down, then we've got our move on down here to 2680, if not 2660s. Up above, if I am completely being too cautionary here, and we do make a high over Friday's high, we look up above here. Here are our next sets of levels that we need to take out. 2723 is the halfway back from November. 2727 is a measured move target I gave you a while ago. This is times 2 the 2019 low to the scene of the crime level at 2585. That's been explained a bazillion times. Unless you're brand new and just joined last week, you might not know what the scene of the crime level is all about. There's a blog article explaining it, and we had a perfect example of a scene of the crime level from the impulse high that we made on the December Fed meeting. And that high was not taken back again until we received the Fed minutes 3 weeks later. So from our 2019 low to that week that we took out 2585 on the Fed minutes being released, a doubling up of that move would take us to 2727. 2727 intermingles beautifully with an edge level left over for us from the October sell-off at 2728.37. This was our closing low for the sell-off that lasted for several weeks. Above that, I threw a little measured move level in here on Friday, just a simple doubling up of Friday's range from its low to its high, and then doubling up from there would take us to 2733. I put that on there just in case there was some crazy-ass like bullish move planned for Friday to end the very first week, the very first close for February, way up high. But in any case, no, that never came to fruition. But if this level is still good and we only make it to the 2730s or whatever, this, just know that that's a doubling up of Friday's range. But ultimately above there is our final target on the road here. And if we can get above here, then we have a whole different market in front of us possibly. This is the 200-day simple moving average at 27.4150. When we look again at the daily chart, we see that unlike the 100-day, which is on a trajectory down, the 200-day is a nice flat line. So it's going to stay there, and it's going to be there for us at that 27.41 to 42 level. And you don't need me to tell you, if you were a trader during the first half of 2018, 27.42 was the devil's level, as we like to call it. It was the level from hell. And here's our 200-day simple moving average intermingling with it right now. So if we get up this high, we have the 200-day simple moving average. We have that 27.42 level from the first half of 2018, and now here we are in the first half of 2019. Are we going to meet with this level again and completely fail here and correct? Or are we going to take this level out and make it our bitch, just make it our support, and we're never going to like break that level ever again and just keep on moving up from there? We'll see. But in any case, I wanted to make sure and give you some further upside levels that we can be looking at, as well as some levels on the downside here. And really, like I said, I think tomorrow, a very good chance that it's just going to be a big nothing burger. Everybody's going to be expecting some sort of big move ahead of Google, but I have the feeling that it's going to be just a nothing burger. And if Google is good, we're going to go up ahead of the State of the Union. If it's bad, we're going to go down ahead of the State of the Union, and then probably have some sort of short covering rally at the end of the day on Tuesday to bring us back someplace important. So, for instance, a breakdown down here to 27.80 that holds, 26.80 that holds, and then brings us back to close right in here around 26.90. Okay, you can totally imagine something like that happening as well. Okay, I hope that this was concise for you and gave you a good idea of what's going on. If you don't understand some things on this video, you can DM me tonight. I will be around to answer your questions, but I will not be around to answer your questions tomorrow until the end of the day. Have a great rest of your weekend and enjoy the game.